Good morning, everyone. This is Chrisi from Solstice ATR and Vulcan Capital Research. I hope everybody's doing great on a Sunday morning. This video is going to be short and sweet. At the same time, I'm going to go over different technicals in the market due to the global and domestic, what's going on in recovery of basically the COVID-19 and everyone going back to reopening, or are we going to still be shut down in the US? First of all, I have the four instruments here, which is the SPX, the NASDAQ, the Russell, and the Dow Jones Industrial Average. As you can see, since February and March 23rd, we had a nice recovery. We recovered the 61.8. We're still climbing higher. If there's going to be resistance in this diamond or this triangle that we are in an up channel, we got to keep an eye on what the market gives us, trade on daily basis what we get until things do change, and be open mind to it. Okay, let's take a look at first of all the small cap, the canary in the coal mine slash RTY. The canary in the coal mine, as you can see, has been, testing back the 61.8. In order for it to continue, we have to clear that 50 simple moving average and the upper down channel on it. If we lose this channel, we can come back to the 50 and the 18 simple moving average. What I want to do is just go to the daily chart and show you how it looks like. Consolidation. And from that consolidation, it's basically compressing, trying to make a decision. If the 50 SMA holds it in that channel and we clear the 1450, 1445 continuation to the 200 SMA and up this channel, we are possibility of recapturing the 1550. So that's the RTY. Let's take a look at the Dow Jones Industrial Average. And the Dow Jones Industrial Average is in a similar pattern. Let's just zoom in. I'm doing them one by one, that way you can see it. We are in that the channel. We have recuperated part of the H pattern, but have not been able to clear the 26.5 area. If we can clear the 26.5 area, continue up to this channel and break out, we will be seeing the upper channel. Halfway back is basically the breakout of this channel. If we lose the 50 and the 50 Fibonacci and the 61.8, look lower. Let's take a look at the NASDAQ NQ. And the reason why I'm saying watch just a little bit more closely, because it has recovered. The technology sector, the biotech, and the NASDAQ 100 have really moved from the 61.8 from the prior high and broke out. I did not change my vibes on it on purpose, just to show you we are in a consolidation in an upper channel due to the fact such as Google, Amazon, which I'll go over, Apple, Tesla, and all, Netflix and Shopify and PayPal are all climbing very sharply higher. We are on the backside of this channel. If we can look above this channel here, continue, that would be great. If we look above and fail, or we cannot, continue on that channel, look for the reset of the 18 simple moving average and the 10,000 area, and eventually the backside of 9,900 and 25,900. So that's the NASDAQ. Let's take a look at the ES in relationship to the NASDAQ. And in the P500, we have recaptured the prior week, the 84. We were trying to look up. We kept failing down, coming to the 18, bouncing off it, coming to the 18, bouncing off. And yesterday we recovered on Friday in trading hour 31.7950, but after hours we reached that. You can see it. It says 31.7950 on that candle. Due to the fact on the daily chart it does not show you the extended hours. This is one thing to consider. If we're going to continue, we're going to break above this channel, get to this area that's halfway, and eventually to the upside of the upper channel. If we fail this channel, come back to this one, we'll be basically trading to the backside. What I'm going to do is break down the volume profile at the end of the video. Let me just go over a couple of international funds. I grabbed some from Spiders, some iShares, and some from Vanguard, I'm sorry. And the reason behind this, I want to go over 4 or 5 different things that I want you guys to keep an eye on. I'm going to put the VWIGX. That's a global international fund, and what we're going to do, go to the weekly, because on the daily it won't show you what it's doing. Come on. Hope that toss is not acting up on us. Okay, let's go to the weekly. And as you can see, it has recovered quite a bit in the international market. If you can count the Eurozone, the international Australian zone, Japan, and Europe, we have recovered that full bounce down that we had, in December. We came back up in February, fell down in March, and eventually from March till now, we have recovered and broke out of the channel. So if I put this on a monthly chart and maximize it from 2008 and up, it'll show you that, hey, things have changed in the international market compared to the domestic market here. And you can see in 2008 till 2009 of March, April, when we started recovering, it took it a while to recuperate. We pushed higher, came back, retested that area of the 2008, 2009. We double bottomed here and we continued higher. This is the distance that we travel from here to here, is almost the same distance we're traveling from here to here. So keep an eye what the international markets are doing. Let's take a look at the VFINX. The reason why I'm going over these first, and I do a couple of spiders, similar situation. This is the Vanguard 500 index class C share. You can see it fell down, recuperated in 2013, continued higher, doubled the distance, then continued higher, retested that almost double part. It went a little bit below it, and now we have recovered part of that move. Let's do one more from Vanguard, VBMFX. I'm going to try to keep it simple, similar way. If you take a look at the total bond market index, as you can see from 2008, 2009, when we recovered this distance, we doubled, came back, retested it in 2013, 2014 due to the Eurozone. Remember, in the European zone, they had a little bit the British exit, and the UK, as well as Germany and France and all that, and Spain, Italy, and Cyprus. We fell down in 2019, recovered 100% of that bond, and that was the little glitch that we had from the COVID-19. So until inflation starts picking up, keep an eye on the bonds. That way you get a better idea. The TLT is an ETF from Spiders. This shows you the 20-year Treasury bond that from 2008, 2009, when we had that spike up, spike down, and the 13 came back in. Then we had the 16, 18 election, 19, then we fell back down and we continued higher. That's the TLT. You can take a look at the XLF. That's the banking sector, or what we call American financial world. That's the 2008 spike up, falling back down, recovering 100% of it. Did a V shape like a cup and handle. Unfortunately, due to the COVID, everything fell back down. In the Federal Reserve Board, from that area here, there's a lot of consolidation in the backside of this area. In order for the financial world and the banking sector to continue, we need that the Federal Reserve Board help the major banks and consumers to be able to get a little bit of loans to get back on track, or the big companies will swallow most of everyone out. So let's take a look at the IWM, which is the ETF for RTY, which is the Russell or the RUT. So this is you can see that's the same thing. If you look at the SPY, similar thing as well. I'm just putting them up there so you guys can look at them. If you can't trade futures in your retirement account, you can trade those ETFs. The DJX, that's the Dow Jones Industrial Average ETF, similar thing. And you can look at the QQQ, which most people do not look. That's like 100. A lot of people do use that one instead of using the SPY or the Dow or the IWM. You're looking at different sectors: small cap, mid cap, large cap, and the Fortune 500 or the Nasdaq 100. You can see from 2008, 2001, 2004, 2003 till 2008, we had that little glitch here. Now, since then, the Nasdaq 100 has continued higher. So from here, I want to go into the TIP one, two other ones, and I'll go to gold. Let me just do this. Oops. That's the TIP iShare Trust for the brokerage and financial world. You can see where it is at, new high for the year. And you can look at the IEF, similar situation. You can see the 2008, 2009, then we continued higher. That's the Barclay Trust 7 to 10 year ETFs. And let's go to Apple first, AAPL. And if I just put them on the weekly, I'm going to go from monthly to weekly so we don't have to have them all that crammed up. You can see that Apple has recovered 100%. I kept this fib here from the high and low from the February till March, and you can see that it recovered not just the 123, the 38, and the 50. It recovered almost to the 50. Do we continue to get to the 61.8 or fail? This is something you should consider, and you can see the way the 61.8, or do we fall back down from that channel that we broke out of, then continue back to the backside of the double top and break out from there. That's Apple. Amazon in a similar situation. You can see it continuing. I don't have a fib on it. Let's take a look at BABA. That's BABA. And you can see that BABA eventually gapped up because they're seeing things. I mean, this is in the middle of that linear regression channel coming out of the squeeze. If this falls halfway and continue, that would be great. If not, look for the backside. Let's take a look at Facebook. Facebook a new high for the year as well. Let's take a look at BlackRock BLK, covering quite a bit of ground. This is the brokerage world. You can see in March of 2018 it was at the high, and December of 2019 it fell back down. In February recovered in 2019, continued high and almost double top, missed it. We fell back down and we are almost at the same area where we had rejection. So keep an eye on the brokerage trail, seeing that. Plus we have, at the same time earnings. So we're going to keep an earning from this week till the next 2 weeks coming. A lot of companies are reporting, so we're going to keep an eye on them to give us a guidance to where it can happen. Let's take a look at Google. New of the year, that's Google. And I would consider this like a triple top if it can continue or fall back down. It broke through that wedge. The backside of that channel would be important. Let's take a look at Netflix, NFLX. NFLX is a linear regression channel. Looked up. If it's not going to continue, go up and fail. If it fails here, look for the halfway back and eventually the backside of the channel. Let's take a look at Tesla. Similar thing. Tesla is way up there. And I do have a marker on Netflix at the 510 as an alert. If it falls through, I'm looking for the 505, 495 before you can do anything in that chart. Let's take a look at Tesla. And you can see Tesla in a similar situation. Broke out of that channel looking at the 1550. If that 1500 does not hold, look for the backside of 1350 because there's a gap here. If it continues, who knows what Tesla does. That's the widow maker for most of the shorts that have been trying to short it in the option, taking their money and cleaning them out to the cleaner. Let's take a look at MasterCard, for example. That's in the financial world, as well as the credit card, merchant accounts and stuff like that. You can see it recovered quite a bit. Let's take a look at Shopify, CHOP. You can see Shopify is at the high. PayPal, PYPL, because most people are shopping from their home, annual high. Let's take a look at, for example, ZM, Zoom, because everybody's online at home watching TV and communicating together as the same time doing video conferencing. It's an annual high. Take a look at Microsoft, because people need computers, need software to do their work from home and stuff. Microsoft an annual high. Let's take a look at a couple of consumer products, because most people do go to Costco, buy in bulk, because they think that, hey, everything's coming to an end, we have to buy a lot of it. So Costco annual high, and I kept the fibs on it. I haven't done any changes on it. Let's take a look at, let's get rid of this fib. We don't need it anymore. Remove. Let's take a look at Walmart WMT. That's the basically I consider Walmart the Chinese goods that are sold in their stores or like Target. So if we're going to manufacture stuff and move things to United States, there's going to be an issue in pricing and and a difference in the consumer confidence in the way that people do shop. If you notice, we are just barely breaking above that channel to continue higher. And let's go back to ES here, and I'll do the profile. Then I'm going to go some of the technical indicators right here. From the weekly, we're going to go to style. We're going to go in the chart set. Instead of the chart, you go to monkey bars. And if you noticed here, I do have a 15-day, 30-minute bars right here. Let's just zoom down a little bit. Let's go to 10 days. Maybe it looks a little cleaner on the 10-day area time frame. We'll just do 10 days instead of 15. Let's see how it looks like. It's still showing me the same thing. It's not zooming down. If you notice, this was the consolidation before the push higher. You know, that 1985 area. Then we continued higher. We got to the 3184, and this was the 3105 quarter. So what we're going to do is grab a Fibonacci. And I'm not going to do much changes on it. I'm just going to anchor it. It's at 84. And the bottom is 3105 quarter. Okay. Edit the property. And from editing the property, we anchor this at 84 and this one at a quarter. And we push OK. And from here, you can see that the fib is right on the last 5 days consolidation of the POC. If this is going to continue higher, what we want to see is basically the breakout of the instruments going to 23, the 38, and the 50 fib. I don't have them here, and I have the 61.8, so you'll have the 38 here. Then you'll have the 123, and actually the 61.8 or the 38.2 should act as support. If we do lose that, and we'll lose the 47, the 23, then eventually look for down here, and eventually back to the other side of the fence. So we're going to trade what we see, not what we think. We're going to go from here in style, go in the setting, standard, to a 4-hour chart to show you how it looks like instead of being crammed up, or 20-day was a consolidation. We had that roundness. We looked up, we fell down in the last 5 days to the backside of this consolidation from 10-15 days ago. We fell back in this area at the 05. We looked down on Thursday. Friday we come in, retested the 11, then we continued higher and we broke above that 70, 68 area. As long as I'm above 68, 65, 53 area, I'm more 56 area, I'm more bullish. If it falls through this area, I'm going to look for the backside of this channel and eventually to the major one down here. So I want, most important thing, 5-6 things I'd like to cover in here to make sure. And most important is taking day by day the market and understanding it. Have a simple, or be simpler than most people by having a setup and a realistic expectation. Do not assume things, because assumptions will hurt you. Trade what you see on the charts, not what you think, and try not to predict it. Let your ego out of the way, because money will flow if you are right. If you're wrong, you cut your loss faster. And I want you to be fluid, flexible, open-minded to the changes in the market due to the fact of the international and domestic market. I look forward to having you in my room. Before I do, I'm going to go over 2 things and we can get out of here. And let's look at it here. That's the international Vanguard. As you can see, I put it here. There was 2 only times in 2008, 2009, and 2020 that we had this spike down in the international markets and reversals. Most of them did not reach the, the momentum indicated to the other side. If you look at the energy sector such as oil, natural gas, and resources, We had three different spikes in 2003, 2008, 2009, and in 2020. If the energy sector, in order for it to come back to norms, and things do have a fall back down, in fact, like February, June of 2009, or July of the 6th of 2020, we're going to be seeing a different change in the market, because the drawdown was basically a 4%, the maximum in 6 weeks. 2 month was positive, and in 3 months was about 9%. So even if I take an average rate of return over the next 5 years, we should be positive, because you know what the outcome is. And usually people going back online, transportation, distribution, trucking companies, shipping companies, airline companies, people need to get around. This was done on the 6th, and if you can see, I showed that 31, 55, 56 area. If we look at it, we're at 31.80. And even if we get a maximum drawdown in the market of 5%, a 6%, or even a 6.5%, from 31.79, if we lose a 5.75%, we should be around 3,000. If we lose a 6%, 29.90, and if we lose a 6.5% rate of return, we should be at 29.70. 572, 73, and if we lose a 7%, we should be at 29, 52 to 32 area. It depends on how you calculate it, and this is the outcome after the energy, coming back to norms from 1996 till 20. This is the drawdown, so that way you are aware of it. If we take a look at the S&P 500 on a weekly momentum indicator, such as a MACD or a CCI or an RSI from 1980 till 2020, even with bad drawdowns of 4.85% or 5%, you can see that the outcome here went from 163 to 187 and a minimum of 44 in 5 years. You can see the dates 82, 84. Remember, this is for hypothetical use only. I don't want you to consider this, oh, this is what can happen in the future, because I wrote here for educational use only. We are not a broker dealer. Past performance does not indicate future results. For illustration use only at your own risk, okay? Because most people come to me, oh, you're showing us this. Okay, here's the drawdown, showing it to you in a little bit more simpler form. And you can see the push down, the push up in the S&P, and this was showing the July 6th. So if I look at it at the 31.80, the drawdowns will be, as you can see, the 75 to 3,000, and the 4% drawback downs. So we're going to trade what we see, not what we think. And let's go one more. And this is showing the bond and the S&P in relationship to the spikes down when interest rates are at a bare minimum and there's no inflation in the market. You can see in 2009 as well, 2002, 2003, similar situation in 2020. But you can see in between the 2019, the 2013, 2016, between the elections, this is the Eurozone, and this is, the overall market from 1999, 2001, to, the Twin Towers, 2000 tech bubble, 2000, 2003, then the pushback in. So you had 2 dates only that were very high spikes in June 19 of 2009 and July 8th of 2020. And here is the gold bug, which I did not go over the other chart. I should show you this on regular charts on TOS. This is showing the 2001, push down 2000, 2001, the Twin Tower, and came back till 2003, and eventually gold spiked up. This is the gold HUI, because you can use a GLD or you can use the GC, which is the main contract. We had that push up. We looked back in 2009 when the real estate bubble 2008 fell down. We went back higher. We fell back in, and this is a similar situation from the 1998 till 2003, similar pattern. We have these 3 tops and trying to break out. This is the overall S&P bearish scenario to bullish scenario from the 1987 till 2020, what the outcome can be in an average rate of return over 5 years. So let's go back to do GC and GC. Hourly chart, it looked up, it's coming back to the 1788. This is my line in the sand for GC in order to continue higher. Let's go to the weekly chart and see that GC finally broke out of that wedge. If I go to the monthly chart, I'll maximize the time frame. We're going to go maximum. We're going to, instead of weekly, we go to the monthly chart, push OK, and you can see that push down coming back up is a similar situation in this area and then as well as in the 2008. What I'll do this area first to show you before it took off. This is a nice rounded bottom. Then it eventually broke out and took off. Here we go. We'll just zoom in. That way you can see it. And that's the takeoff of it. And we had the 2008, 2009. Come on. This is the 2008, 2009. Similar situation. Took off. Then we fell back down. And now we have recovered part of that ground to the upside. In order for the gold bucks to continue, we need to make sure we can continue higher. And I have left the old fib on because I'm looking for the 123 up. If it does not, we'll look for the 23 on the backside of this channel for continuation higher. Let's go look at it on HUI, which I really totally forgot about to put the gold up there for you guys. And this one we're going to zoom down just to give you kind of a better feel. And this was, you know, the 2000, 2001, 2003. This is a similar situation to those three tops because, you know, that ETF doesn't go further out. Then we continued higher in 2008, 2009. We fell back to the same area. We went higher. We consolidated in this area, and now gold is trying to make a cup and handle. If it makes a little cup here and continue higher, that would be a great area for gold. Or you can look at GLD, which is the ETF for gold, but that doesn't go as far as 2005. So it depends which fund company, what we're looking for, and the patterns on a trade. So trade what you see, not what you think. And let's go look at the CL, which is the crude oil. I totally forgot about the crude oil. Let's go to the daily. And you have this nice pattern on it. When we were down in this area, I kept screaming, go long, go long. We're going to get to fill this gap. We're eventually filling this gap and we're going sideways. We do not want to lose this channel or the 50 SMA in order to continue higher. If we do, you know, and things go back on lockup due to US, you know, little bit of spikes in COVID-19, I don't see that. If we're going to continue, I hope we can get a breakout out of that 42 area. I would look for the backside of the major channel that we fell from, the 49.50. So that's for now. That's what CL is looking like. You know, I don't have a trade yet right in it. I will call it in the group, Discord or Solstice ATR. I look forward to seeing you guys on Monday. Be safe, take care, and over and out.